Hi, and welcome to CMS Forex News. I'm Christina Robinson, and today is Friday, April 4th, 2008. German manufacturing orders declined 0.5% in February. The results surprised forecasts and show that the euro's appreciation and the global slowdown are hurting exports. Last month's orders, however, were revised up to show only a 0.7% decrease. March was the third consecutive month with job losses for the U.S. as the economy shed 80,000 jobs. Forecasts had called for a fall of 50,000. The unemployment rate rose to 5.1%. A deteriorating labor market will affect consumers as it pushes down confidence and makes consumers less inclined to spend. The news brought added volatility to the markets today. The euro jumped to a new session high in a knee-jerk reaction to the news, but came back down rather quickly. For the rest of the session, the pair traded between 1.57 and 1.5750. The dollar faces a larger impact from the news in pairs linked to carry trades such as the Swiss franc and yen. Against the Swiss franc, the first hour and a half brought the dollar-franc pair below 1.0050 in volatile trading. The rest of the session, the dollar managed to pare some of those losses, as it did against the yen. Yesterday's large jobless claims and today's worse-than-expected employment data amounted to a swing of 180 pips in favor of the Swiss franc. The pound-yen pair, a favorite of carry trade, dipped 200 pips after the release. The payroll data increases the chances that we may see a strong recession in the U.S. after some indicators this week had somewhat calmed those fears. Overall, investor confidence was strong this week, and carry trade pairs rallied in the first half of the week. The pound had climbed 700 pips on the yen prior to today's session. Today's data, though causing a dip, was likely led by those traders using the data as an excuse to trade profits from their carry trade positions. As we saw before, the Swiss franc was a benefactor of today's data. The pound-franc pair dropped more than 150 pips following the U.S. release, but found support near the 2-to-1 level. Overall, for the week, the pair is still up around 230 pips. In Canada, employment change was positive but mild after 2 months of strong growth. The unemployment rate increased, showing that more Canadians entered the workforce than there were jobs created. A second release showed the IV-PMI, a measure of economic activity, declined from its February measure of 62 to post a 59 in March. This is a timely indicator for Canada and surprised expectations on the downside. The loonie, like most other currencies today, gained on the dollar following the payroll data. However, the poor IV-PMI report allowed the U.S. dollar to pare its earlier losses and go up for the day. Despite today's moves, the Canadian dollar has performed well since Tuesday as the country's stocks rallied and prices for the country's commodities have been on the climb. Next week starts the retail sales data from New Zealand and the U.S., along with producer and housing prices from the U.K. The rest of the week features a heavy fundamental docket, with some of the highlights being CPI data from the U.S., Canada, U.K., and New Zealand. And that completes the news for this week. Thank you for watching, and join us again Monday right here at CMSFX.com.